morning to all traders and welcome to this market insights video on FX majors. Today we're going to have a quick look on the pound against the dollar and also on dollar against the yen. We saw dollar actually being supported yesterday as the House of Representatives passed a spending bill that is actually going to fund the government and support farmers and also families that are indeed in need, after Pelosi and Mnuchin finally have reached an agreement. Now, at the same time, we had Powell speaking as well yesterday. He did really reiterate and actually directly also referred to the government by saying that Congress has a responsibility to provide more fiscal spending, as it will probably be necessary, as we actually still go without a fiscal support, a fiscal package having been agreed in the White House. In the meantime, the FDA is making it more difficult for private pharmaceutical companies to have a vaccination approved before the November election, as they're actually on a not public, I would say, note, but on a private note, they make the guidelines for the trials stricter. Now, Boris Johnson yesterday, he announced more restrictive measures in order to control the coronavirus in the UK. But he did say that they're not going to go into national lockdown. However, pubs are going to close earlier. And he announced also fines for people that they failed to wear masks as well, in addition to mobilizing the armed forces in order to support the police in enforcing the rules. Obviously, pound didn't like that, and it started falling once again. And this is what I want to start with today. Okay, I want to start with the pound. I'm looking at this with a triple zigzag pattern over here, okay? Which means we've had an ABC here. We have finished an ABC up to the 134.81, which is a double top with the previous wave X, right? And to me now it looks like we are heading down for another ABC, right? Now this ABC ideally would come down to the previous low, right, which is around 114 level for wave Z. And also this is the 200 Fibonacci extension of the expected wave 1, yes, and a wave 2 at 50 Fibonacci of this wave 1. So what I'm looking at here, and since we are still, and I'll be honest, right, since we're still trading above wave 1, right, because wave A, sorry, we're still considering this to be bullish, right? But I'm thinking that this is 1, 2, 3, 4, and 5. I want to see wave 5 being the first retest at 126.40, a wave A. And then I want to see a bounce up, a simple correction to the 50%, or anywhere between 126.65 and 131.62, right? And from there, head lower for wave 3 at 100 Fibonacci, then 4 at 61 Fibonacci, and then 5, yeah, at 161 Fibonacci. That is going to be wave A. Then we're going to see a wave B and wave C. The alternative, of course, here is that this is going to be an A, 1, 2, 3, 4, 5. This is going to be an A. This is going to be a B, and then we're going to have a C, okay, an extended C, okay, or we could be, it could be a case where we'll have W, X, Y, X, and Z, right? But whatever case is, the moment we break below this level, this will suggest to me that we are probably heading down for the previous wave Y, okay? The other scenario I want to talk to you about is that the potential of having this bearish impulse ending down here, which means this is now, of course, in the cycle degree as well, right? The first wave to the upside. That makes this a wave 1, a wave 2, a wave 3, a wave 4, and an ending diagonal for wave 5, right? Because this looks like a good diagonal as well. Seems to suggest this is A, B, and a C, right? And we could go down to the beginning of wave 2 or even down to wave 4, to be honest, to complete this correction, right? That means that we are going to break the 61.8 Fibonacci, and we're going to start moving lower with the first stop at 122.40, second stop 120.40, and from here we can start looking for prices to move up once again. Another scenario is that this is wave 1 and 2, and the upside move, because again we still trade above wave 1, right, still are above this level. This is a multi-structure move to the upside. Okay, so 1 2 1 2 3 4 5 is done. So this is wave 3, correct? We're going to see a 4, and then we're going to see a 5. That means that this is going to be some sort of open diagonal, right? Now jumping on dollar against the yen, we've always looked at this with a corrective eye anyway. So I was expecting wave B to finish down here because I was looking at this as an ABC, right? Obviously, with this now prices remaining here, and we'll have another triangle pattern here. I'll turn this into a double zigzag, and it looks like we've ended down here at 104, just below 104. A wave B, and we're gonna start heading higher. Or in case we haven't, okay, because we're still this is W, this is going to be a wave X, right? If we haven't, it means that we're going to have this becoming an A, B, and a C, right? And we're going to extend probably lower, perhaps near the previous low of 101, okay? That would mean that this is going to be an A, B, and a C, right? Perhaps a flat. And prices are going to go up to the 111 again once we actually go back lower here, right? But we will need to break the 103 first before continuing to fresh lows for the year at least, right? Now, the other scenario for dollar yen is that we are actually moving in a double zigzag here. It's a WX, and we're waiting for wave Y, right? And wave Y is an ABC. Now this ABC, again, is a similar pattern. It's just that this is a triangle, right? And that seems to suggest that there's going to be another wave to the downside, right? At least to the 103.40, which is a 78.6 Fibonacci retracement of wave A. And then we expect the break of the upside, of the descending trend on the upside, to start considering bullish opportunities. Okay, so thank you very much. If you like the video, please do not hesitate to comment. If you have an alternative scenario, also feel free to comment on the post, and I will get back to you as soon as I can. Thank you very much for watching, and we'll speak again tomorrow.